And what this tells us is that at some point we are going to blast through the upper end of this and we're going to be off to the races, a la 1975 to 1978. If you go back then, the same exact pattern played out. Yeah, so right now we are coming into some resistance on gold, so you might get a little bit of a pullback. You can see that this choppy consolidation level, that's where we are. So look for a near-term pullback of sorts, but I do think that gold is going to head sharply higher. I'm going to show you this parallel channel. It's one of my favorite parallel channels here. And again, basically what we can do here is stretch this down. This is what we would call a bullish consolidation multi-year period on gold. And what this tells us is that at some point we are going to blast through the upper end of this and we are going to be off to the races, a la 1975 to 1978. If you go back then, the same exact pattern played out. You had 2 years up here, just like we did in 2018 to 2020. You had 2+ years of choppy sideways action, and then gold literally went from about $100 an ounce back then to $1,000 or $900 an ounce. And again, I'm not calling for a 9 or 10x on gold here. I think I'd be very happy with a 2 to 3 times X on gold. So, for me, this is the play right now. I think next year in 2024, very likely Bitcoin could be the best performer, but gold again is the safest, best bet here for 2023. And again, the beauty of it is history is a great telltale repeater. And if you go to that mid to late 70s period, the chart is almost identical to what we're seeing in gold right now. You had this kind of mid 70s sideways to down chop like we've seen for the last 2 years in gold. And then you had the big breakout. It actually came in kind of the late 70s and gold 10x'd. So I don't think gold 10x's this time because obviously Bitcoin will take some money away from that. But I do think it's going to be probably, in the next few years, you could be looking at a 3x on gold. But it's getting a little trickier because I do think Bitcoin bottoms this year and has a bounce. I just think that it won't have a significant enough bounce this year to overtake the gains in gold. And I still have it priced in like gold should blow through its 2020 and 2022 highs of around 2070s to 80 this year. So we're looking at some major upside. I think 2,300 is a pretty solid target price on gold for this year. My guess is that we haven't seen the recession yet hit, but it is going to come in a big wave and it's going to be nasty. It's going to be one of the worst recessions that we've seen probably since 2008, 2009. And it's likely going to last a lot longer, mainly because the Fed won't be able to stimulate us out of it in the early portion. So, I mean, really, I've gone on record and said, I don't think the S&P will make new highs for 10 to 15 years. I still think that's very logical. If you look back at the dot-com bubble, it took the NASDAQ 15 years to make new highs. And here we are seeing the amount of liquidity that was in the markets, the bubbles in crypto, in stocks like AMC and GameStop. It's very, very similar. And without the Fed stimulus, we could be looking at 10 to 15 years before new highs are hit. I do think we likely will see the markets, or at least the dollar, having topped out here. And that's going to be very good for metals like gold and silver. I think it'll be phenomenal, in fact, for gold and silver. You also have other countries starting to look to take over that reserve currency as well. And if the reserve currency starts to be, let's say in digital yuan or something else, there's a whole lot of dollars that countries around the globe hold, and we're talking trillions of dollars that they can then dump on the open market, which will also add to that negativity or downward move on the US dollar. So I do think that, again, the dollar eventually is dethroned. It's one of the reasons why eventually I do think crypto, or at least Bitcoin, becomes intriguing as a store of safety, at least a digital gold, to kind of offset the dollar decline. But yeah, I mean, it's going to be, the next 5 to 10 years is going to be unbelievably fascinating and kind of scary, frankly. Likely to see the dollar weaken continuing over the next 6 to 12 months. And so I think there's certain pockets where money will rotate out of the US, but I think the US is now on a downturn that will last a very long time. It will likely spread to the European Union, the UK, and maybe even Japan to some extent, although depending on their policies, maybe not. But ultimately, I do think that it's going to be something that is mostly global between the big powers. People aren't used to these long bear markets where earnings aren't going up. So there's going to be this real struggle to say, okay, well, how do we justify a rally or a long rally in the stock market when earnings growth is zero or negative for multiple years? And the answer is you can't really, right? It means generally prices have to go down aside from the occasional bounce. So then where does money go? And you say, okay, well, gold, maybe Bitcoin eventually, but gold is really going to be that safety hedge in a market where we're probably going to see elevated inflation, so 3-4% inflation, but the Fed won't be raising rates because we're going to be in a recession. And then at the same time, the Fed really tied and unable to get us out of that recession. And then lastly, I think one of the most underrated points about gold is that everyone has hated on it, right? So it's one of the most underinvested assets out there. So if you just get it to be brought back to where it was maybe 5-10 years ago in terms of investments, you're probably easily north of the all-time high on gold at this point. So I think all those things play into it. Now the gold miners are in an unbelievably sweet spot and they should actually outperform. So I think this is, I mean, the chart is kind of telling us that something like that is on the horizon. It still may be months away, but it certainly is interesting to kind of note how we're getting to that period. We've been under trend of inflation for many, many years, which then usually means to get back to the medium or the mean, we have to have a multiple period of years above that goal of 2%. And I think that's what we're going to see. But having said that, that would generally indicate the Fed would be unlikely to stimulate. I would argue that in the beginning, for the next few years, the Fed will be really hesitant to print any money or lower interest rates because inflation is going to be sticky north of 2%. Whether it's 3, whether it's 4, I'm not sure. But they're going to be not wanting to trigger the inflation bug again. However, let's say 5 years out, we find ourselves in this protracted, this long recession that's borderline depression. There will be a point where it gets so bad, they will have to go back to that, what they do best, which is printing money to stimulate growth. And again, I could easily see us, maybe not in 2023, but in the next 3 years, breaking out of this consolidation phase and then actually having one of those super spikes towards the $50 level per ounce on silver. Even though silver is somewhat of an industrial metal, which would suffer obviously in a recession period, I still think that the value of silver will increase in a elevated inflationary environment. What's really interesting about silver is you have this resistance level that you're kind of bubbling up into. But once you take that out, you really have full range to retest the recent highs here around $30. And what I love showing to people is that when you break key levels, if you go back on the chart, you have these huge mega spikes in silver where it's almost like a short squeeze in silver. And I do think that that's probably one of the things that we're coming up to in terms of that type of spike. So I think, again, what's amazing here is it's almost like a double top here on silver, right? So it's exciting to see these things because the metals have been kind of like, they like no one, if you talk to like any 20-year-old who's investing, it's either crypto or, GameStop or all these, and they're forgetting about this asset class. And in an environment where you have this elevated inflation, Fed not raising rates, a dollar that's probably declining, this is the perfect recipe for one of these super spikes. There's two sides to it, right? So I have my emergency stash, which is physical gold and silver. And again, it's not a lot. I don't hold a lot because, it's more meant if I wake up tomorrow and the internet's down and the banks are closed and like I have no cash on me and my credit cards don't work. Well, how do I, pay for things? How do I do what I have to do? And the answer is physical metals would then take that place, right? Either that or the barter system. So that's a small percentage. Aside from that, I mostly trade in and out of the GLD, GDX, the SLV. So I'm using the ETFs to really trade it. I don't do the futures quite as much. But again, those ETFs are really my main swing trading opportunity.